Hey, John, really good to see you. I want to ask a question that I've been hearing a lot of people talking about lately. Is now a good time to rebalance? And of course, I'm asking because you and I have talked about it in depth, the recent market volatility, bond yields are falling. And so, as we navigate this volatility and so much uncertainty, is now a good time to consider rebalancing?
Yeah, well, no matter what the markets are doing, you should always be aware of the balance of your portfolio. And let's
Hmm.
let's use that number that's been disparaged so much here this year, the 60/40 portfolio. So let's say you have a 60/40 portfolio, and your stocks are doing real well, and that your value is so up that now your 60/40 portfolio might be a 70/30 portfolio. In an uptime, that's where you may want to sell high and rebalance a little bit. And in downturns, usually you kind of see the opposite, right? A 60/40 portfolio might turn into a 50/50 portfolio because of stocks.
Hmm. Right.
And really, so I encourage rebalancing no matter what. We look at every quarter, we look at our clients' portfolios and look to rebalance to keep them in line with what we designed. As far as today, yes, you can always rebalance, but um, you know, the stocks and bonds this year have pretty much almost been the same. I mean, we've seen uh, very high volatility with bonds because of the interest rate hikes.
Right. And John, just to kind of put a finer point on it, the reason that we rebalance is when we are out of whack, we're taking on way too much risk, right?
Correct. It's almost like that diversification slide, right?
Right.
We want to just keep it in the middle. We want to have the balance that you're comfortable with as the client. So in our discovery, if we're saying, hey, listen, you're a 60/40, a 40/60 client, we want to keep you in line and balanced within your plan.
Right. Okay. So now to talk about the asset classes that you were talking about recently, I just love this chart, John. When we look at this, stocks and bonds are both down. So is this when we revisit our percentages?
Again, they're both down. They're
Yeah.
fairly equal, so there may not have to be a whole lot of rebalancing going on. However, like I said, quarterly we look, and I encourage, if you're a do-it-yourselfer, quarterly check it out. Just make sure your balances are in line with the portfolio allocation you want.
Hmm. So, John, is this when I go out and I just buy oil and commodities, just load up on them? Look at them at the top of the list, right?
Yeah. Only if we had that crystal ball, right? It's
I
like I tell
know.
people, I don't have a crystal ball. Doesn't have a crystal ball. What I'm really good at is telling you what happened in the last 12 months, and even right now, right? Year to
Yeah.
date, oil and commodities up 52%. And now that's the kind of like that euphoric. People are saying, "Hey, I got to hurry up and get into oils and
Right.
commodities."
Right.
But are you getting in at the top, right? GameStop, that's a great analogy, right? People made 300+% in the first 2 weeks, and then when people finally hopped on, they lost 30%.
Right.
So you don't know if that's going to go start to drop from here. And commodities and oil are very volatile. Back in during COVID, we saw oil drop 50-60%. So don't get caught up in the euphoria. And it's like I always say, always have that plan before we go into this market volatility so you can stay the course of that plan.
Right. So important. Also, something that is really important to you. Are there any tax implications that we need to consider before rebalancing?
Oh, the way to my heart, the
Yes.
tax talk. So if you have an IRA or a Roth IRA, there are no tax consequences for rebalancing because you only get taxed when you take a distribution. In a Roth IRA, you don't get taxed at all. If you have a non-qualified account, so a trust, an individual or a joint account that's taxable every year, yes, you do have to understand that anytime you sell a stock, there may be a short-term or long-term capital gain or loss. And you have to understand which, because short-term gains are taxed at ordinary income rates. Long-term gains are taxed at long-term capital gain rates, which are favorable.
Right. Very important considerations. I love that we talked this through, John. It's so helpful. If somebody has questions about whether their portfolio is allocated the way it should be, what's the best way to reach you?
Yeah, you can reach us two ways. You can give us a call at the office, 858-935-6210, or visit us at www.gosecurus.com. And under the Contact Us tab, you can pull up our online calendar. And from either location, you can schedule a 15-minute phone call for any questions you may have, or a 90-minute complimentary consultation.
That's great. John, thank you.
Thank you, Erin.